Hello traders, you're welcome to this video. In this video, we are going to be looking at how you can supercharge your trading on the 5-minute chart. So we're just going to be looking at some indicators that are very good on the 5-minute chart. Okay, some of the best indicators for trading on the 5-minute chart. In this video, we're going to be looking at the moving averages, the Bollinger Bands, and the RSI. They can help you to make quick and informed decisions. Okay. So starting with the moving averages, we're just going to go to the 5-minute charts. Okay, starting with the moving averages, the SMA averages the closing price over a specific period. Okay, it's useful for identifying the overall trend. That's for the SMA. Then the EMA, it gives more weight to recent prices, making it more responsive to price changes. Common periods for day trading are the 9 EMA and the 21 EMA. So we're just going to be using the 9 EMA and 21 EMA for this strategy. The 9 EMA and the 21 EMA. Sorry, this should be EMA. The 21 EMA. We're going to be using both of them for this video. Okay, 21. All right. Now, when the 9 EMA crosses above the 21 EMA, it indicates a potential bullish trend. Conversely, when the 9 EMA crosses below the 21 EMA, suggests a bearish trend. So when you have a price bouncing off the EMA lines, for example, in an upward movement, when you have price bouncing off the EMA lines, it indicates a potential points for entry. For example, in a bullish move, you have price bouncing off, you can enter after a bounce, after price bounce off the trend line. In a bearish move, you can enter after price bounces off the trend line, because the trend lines act as dynamic support and resistance levels. Okay, now it's important that because we are considering short-term trading, remember this is the 5-minute chart, moving averages help out filter market noise. Okay, because this is a noisy time frame, 5 minutes time frame. So the moving averages, using this crossover signal, it can tell you when is a good opportunity to enter. And sometimes it's important that you do not waste so much time to enter. That's why you have to also confirm using things like support and resistance levels, trend lines and all of that, because this is a 5 minutes time frame. So you can have a reversal in no time. So you might want to just look for quick trades. When you enter a trade, you might just want to stay there for a short while before exiting. So when you get a sign to exit, you should exit almost immediately. Okay, now let us look at the Bollinger Bands. The Bollinger Bands is the next on our list. The Bollinger Bands consist of a middle band, usually the 20 period SMA, and also two outer bands typically set to 2 standard deviations above and below the SMA. So how do you use the Bollinger Bands? In terms of volatility measurement, the distance between the bands indicates market volatility. Okay, wider band signifies higher volatility, as we can see that in this situation we had wider bands. Can you see? Indicated there was a high volatility during that period. Okay, while narrower bands, like we can see here, indicates lower volatility. Around here we had a sideways movement. Okay, now in terms of trading the signals, when price touches the upper band, it can indicate overbought condition. Okay, while touching the lower band can indicate oversold conditions. Traders often look for reversals at these points. Okay, now in terms of breakouts, when the price breaks above or below the bands, for example, we have a breakout below the middle band here, it signifies the beginning of a strong trend. So we can see that the price rallied all the way to this point, all the way to this around the support zone before it tested the middle band again. Okay, now it's important that you know how to use the Bollinger Band, because it provides insight into potential price reversals and volatility. So you might want to use the Bollinger Bands for confirmation to the signals that the MAs are giving you, so that you can catch quick price movements, enter on time and exit on time. Now we're just going to be adding the RSI to our chart, which is the final indicator we are going to be considering in this video. Okay, the RSI is a momentum oscillator that measures the speed and change of price movements, typically displayed on a scale of 0 to 100, as we can see. An RSI level above 70 indicates overbought conditions, while below 30 indicates oversold condition. Now, how do you use this indicator? Now, in terms of entry and exit signals, we use the RSI to identify potential entry points. Look for divergence between the RSI and the price. For example, when the price is making a new high, while the RSI does not. For example, we can see around here we had a new high, and then here we had a lower high. That indicates a possible bearish move, and you can see that just shortly afterward the price came down all the way to this point. So we can use the RSI to confirm divergence, possible reversals, and then also the RSI can also indicate overbought and oversold zones for us. We will know when price has been overbought, has been buying for a long time, and could possibly begin to reverse, and when the asset has been selling for a long time and could possibly begin to reverse. So this indicator gives us hints on when an asset is overbought and oversold, or when the momentum is strong, and when the momentum is weak. Now, it's important that we combine these indicators to confirm trends. Okay, you can start by identifying the trend using the moving average. If the 9 EMA is above the 21 EMA and the price is above the bands, consider a bullish trade. Okay, now you can use the Bollinger Bands for timing. If the price approaches the upper Bollinger Band and the RSI is above 70, this could be a signal to take profits or enter a short position, like what happened here. We would have exited our buy, enter a short position, and then we can use the RSI to identify divergence, just like we did here. If the price is making new highs but RSI is not, you can consider this as a potential warning to exit or adjust your strategy. So if we are in a buy trade and we began to see this, we have considered exiting our buy trade, because just after that we had a sell move. Okay, so by understanding and effectively using the moving averages, the Bollinger Bands, and the RSI on the 5-minute time frame, you can make quicker, more informed trading decisions. Now, you might want to practice combining these indicators in your trading strategy to enhance your potential for success in short-term trades. Okay, but always remember to backtest your strategies. It's important. Backtesting is also important. Backtest your strategies and adapt them to the market conditions for optimal results. Always use an amount you can afford to lose, and make sure you practice sound risk management. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thanks for watching. Happy trading.